As a business owner, you have a bunch of unique advantages. One of those being taxes. Most people come into me with one main concern: taxes. They see high 5 to 6 figure tax bills and they think, I want to do better tax planning. And that's what I'm here to help you do. There are so many great tax planning moves that you can make as a business owner. The first one is entity selection. All the time I talk to business owners, I ask them what's their tax status, and they say I'm an LLC. An LLC is not your tax status. That is the legal entity that you have set up, but you have to take it a step further. There's S corps, there's C corps, there's partnerships, there's sole proprietorships. Setting up the right one can be the difference in a lot of tax savings. So the most common one people think of is S corps. So if you're just a regular LLC taxed as a partnership, how it works is, let's say you had $150,000 in profit. All of that flows through to your tax return, to federal, to state, and then you pay self-employment taxes, which is 15.3% on all $150,000. However, if you were an S Corp and you decided, hey, I'm going to pay myself a $100,000 salary and then leave $50,000 as profit that I can distribute to myself, well, then you owe on the $100,000 self-employment taxes, federal and state, but on the other $50,000, you don't have to pay self-employment taxes, which could be the difference of over $7,000 in tax savings. The second one is business retirement accounts. So it is really common for business owners to not really care about retirement or investing outside of their business. And I think that's okay in the first few years. But after you start to really build this business, you start to have a lot of profit, a great way to help on taxes is by using retirement accounts. So my favorite is a solo 401k if you don't have any other employees, but there's also SEP IRAs, regular 401ks, etc. All of these can be really great ways to save for retirement. So let's use an example of somebody has $500,000 that they're going to be taxed on, and they decide, hey, I'm going to put $20,000 into my 401k. Well, instead of being taxed on $500,000, you are now taxed on $480,000. So if this person's in the 35% tax bracket, they decided to basically save a $20,000 to retirement, you end up saving $20,000 times by 0.35%, which ends up being pretty close to $7,000 in tax savings. This is really impactful and something that you want to think about. Now, the third one is maximizing what's called the qualified business income deduction. This is one that is missed so often. People really don't understand it. So if we go back to the first one in that S Corp example, what many people don't understand is that you have this qualified business income deduction of 20% of business profits. So that S Corp example, if you paid yourself $100,000 in salary and you only had $50,000 in profit, you're only going to get 20% of that $50,000 as a qualified business income deduction, which is only about $10,000. However, the other person who stayed as a partnership and had $150,000 of profit, they're going to end up with $30,000 as a qualified business income deduction. So a lot of these tax planning moves go hand in hand. You can't just say, oh, I'm going to move to an S Corp and save on self-employment taxes, because that might reduce what you end up getting in the qualified business income deduction. The other thing that you need to note about this is there is a phase out. And so once you phase out, it starts to become the lesser of 20% of business profits or 50% of W-2 wages. And so you really want to be working with your financial planner and tax team to make sure that you're optimizing the qualified business income deduction. We've worked with CPAs and our clients this year, and some of them are saving $25,000 to $50,000 just on taxes, just by learning the right way to pay between salary and distributions to maximize this deduction. The fourth one is hiring family. So let's say you have some kids in high school, or let's say you have a spouse and they can help you in the business. They can do video editing. They can clean up the office. They can help do financial work. You know, there's a bunch of different roles that they can do, and this can be really advantageous. You'll see on social media, people talk about this all the time, of hiring babies, paying them for modeling. That's not something I think is really a good idea. But when people are an old enough age where you can actually pay them for the work that they're doing, there's a lot of good benefits. The first one is you teach them hard work. You can show them what it's like to work inside of a business, give them roles. That's more so for kids than a spouse. But the other one is, if you pay them, that is a deduction to your business. It's income that goes to them. If this is a spouse, they could use the solo 401k or another 401k. And so it has a lot of really good advantages just of income going their way, being able to save some for retirement. If it's a child, then they have earned income to do a Roth IRA, which can help set them up for tax-free dollars 40 to 50 years from now, which is a really awesome thing to give to your kids. The next one is taking advantage of an HSA. So this is not unique to business owners, but let's say you have a health plan through work that offers an HSA. An HSA is a health savings account. You can put money in and it reduces your taxable income. It's also pre-FICA taxes. That money can then get invested and grow tax-free. And then in the future, you can use tax-free on healthcare costs. This is a really great account to consider using. The next one to talk about is deferring income or accelerating income. So this is something that we think about with the business owners a lot. So in December, when we were meeting with a lot of our business owners, they had a bunch of income coming in that we ended up choosing to defer to January because it ended up making them not have to pay that in taxes this year. And sometimes the best thing to do is just defer it to the next year. If this was a really good income earning year and you don't know what next year looks like, it can be really helpful to do that. And the last one that I want to talk about in this video is Roth conversions. So this seems counterintuitive. For so many people, all you think about is paying the least amount of tax in this year. But for a lot of the people that I work with, they just launched a business this year, or they sold their business last year and they're starting a new business this year. And you know what that means? Really low income. Good tax planning is all about optimizing taxes so you pay the least over your lifetime, not the least amount this year. And so what we're doing is saying, hey, you've been making a ton of money for a ton of years. You have all this money in pre-tax accounts. How about we convert some of this money from pre-tax to post-tax, use up the 0% bracket, use up the 10% bracket, use up the 12, sometimes even through 22 and 24. And so they're able to convert a bunch of this pre-tax to post-tax money over when they were deferring it before at 37 and now move it over at an effective tax rate of maybe 12 to 15%, which is doing a really good job of optimizing these lower tax brackets, which for some people they might never have again. These are some of the most impactful tax planning moves I see for business owners. Work with your team, think through these, and make sure that you are taking advantage of all the opportunities in front of you. Again, business owners have such a unique advantage. You also get to spend everything in the business pre-tax, right? So revenue comes in, you can, buy the things that you need, spend on staff, etc., and then that gets you the profit, and then that is taxed. So remember, take advantage of this. Thank you for watching. If you enjoyed this video, please leave a like and go subscribe to my channel for more personal finance content. And as always, please leave your thoughts in the comments below, and I promise to get back to every single one of them. We'll see you back next week.